welcome to the Wedding Dish podcast. Grab your fork and knife and take a seat at our table as we dish on all things weddings. You'll hear stories and tips from real couples and wedding pros about love, life, and entrepreneurship. I'm Sarah Alapin, your host of the Wedding Dish podcast and the CEO of Photos from the Hardy and District Bliss. We do have our little Snorosaurus Rex over here. Cluso is taking a little nap behind me, so you might hear him. He's on a break from the cone of shame. He scratched his little eye. Poor guy, but he's getting a break while he takes a nap, so he won't get after it. Thanks everyone for tuning into the Wedding Dish. Today, we are dishing with a repeat guest who is a financial coach who helps couples figure out their money together without losing their minds. The human behind Dylan Teaches Finance. Dylan, thank you so much for joining me today.
Thank you for having me a second time, Sarah.
Yeah, I'm excited to talk about money stories. It kept popping up throughout our entire first episode. So I was really excited to bring you back. And thank you for coming back on to talk about this.
Yeah, I think it's money stories I think something people are somewhat familiar with, but it really is important to know the details of your own money story to make progress with money on your own or with a partner.
Yeah. Well, let's get into it. What are money stories?
Money, when I work with clients, couples, individuals, and one of the first things I ask them is like, how did you learn about money? And that's a thing they have immediately available to them. There's not even a breath between that question and answer. And the funny thing about it is that they may never have said those words aloud. They know it. It's imprinted in probably the ways they think about buying dinner or how to go on vacation or when they're talking to their partner about money. It all has to do with their money story. Now, what is that money story? What is the thing they're saying? Is that like, well, our first relationship with money is when we're a child. Even before we can speak, we think about our gifts that we receive, how our parents did their own vacations, what you had for dinner, how you saw your other neighbors and friends and family eat, and what houses they lived in. All of that kind of goes into your money story, how your parents managed their money for the household. As we get older, we have that old joke, it's like you're turning into your father, you're turning into your mother as you get older. A lot of that's true for money as well. And it might have actually been there in your 20s and 30s as well, but we really didn't see it. And as we get into our 30s and our 40s, after we start having a family or building up and getting married, it's like we start going through those adulting aspects of life that we saw as children with our parents, our caregivers. When we're 23, 24, we still have some money story, but it's also a very much easier life. For a lot of people, it might have been like, you need money for rent, you need money for pizza, you need money for maybe a fun weekend out to the beach or something like that. But now when you get older, it's like, okay, you have to pay for health insurance. You're figuring out car insurance. You're thinking about dental for your child. You're thinking about your own dental. You're thinking about retirement. And so the money story that we had growing up, the decisions that we're seeing and kind of reflect that DNA starts to be more pronounced. And it's more pronounced, not even like in the action we take, but also the stress that it can add. It's like, okay, why am I having difficulty managing these things when we're going to talk about this more. I'm great at my career. I'm a great partner. I'm a great parent. I'm a great son, but money just shuts people down or it doesn't allow them to flourish really in the same way. So it is our families still speaking to us, even when we're going to buy a cheeseburger at the end of the day.
That's so interesting. And thinking about my personal money story, I spend and save in a way my mom spent and saved, and my brother does it the way my dad did.
I am so excited because you never get not all hosts are ready to talk about their money story, and you just invited me to ask you about it. So say more. How would you describe that savings, and how did you recognize that you'd saved like your mom?
So my mom and I are very much like we're willing to invest in something if it is going to enhance our lives in some way. But we hang on to things for a really long time. Like I'm not the kind of person who's going to go out and buy tons of new clothing. Like I think I bought this sweatshirt probably 10 years ago, or like the shirt I'm wearing probably 10 years ago. And maybe it sits on my shelf for like 5 years, but then it comes back into rotation for the
Okay.
next 5 years. I still have clothing from middle school, actually.
Wow.
But that's not to say I won't invest in something. If I really want it, I absolutely will. I'm just very like thoughtful in the way that I spend
Okay.
because I want to spend my money on experiences and travel and things that, enhance my life as opposed to something, that I don't really need, that I
Okay.
just kind of want a little bit. And that if I waited, a couple hours, I wouldn't think about ever again. So I'm not an impulse spender. My
Okay.
dad and my brother are very much impulse spenders.
Mm.
And so I think my mom has sort of the opposite reaction where she like will refuse to spend money on things sometimes because she doesn't want to be impulsive. And I have a little bit of that in myself.
Okay.
Um, where I'll be like, no, I really don't need that. I'm not spending money on. That's just not going to happen. I already have something else that can do that job. I don't need this second thing.
This is very interesting because I would say in my work at least I meet people who have money stories that have led them to have more difficulties with money. And you've graciously shared your money story, and your money story is like, you know what? I'm very intentional. I have all this great savings machines inside of me because of my mom. So kudos for sharing your money story, but it's so funny that it's like it's going well. It's a good money story. And calling out your brother for not having a good money story. Yeah. That
I mean,
makes
he
sense.
does
That's fair.
well.
Sure. 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 Sure.
But he's like the kind of guy where he'll see like Black Friday, he's on Wirecutter and he's looking at like the best of this thing. And he'll
Yes.
like, instead of buying, like I go to the dermatologist and I ask what my skincare regimen should be. I'm not going to just buy something because it's expensive, but it'll like
Sure.
give him that dopamine hit to buy something.
Yeah. Do you? So I'm going to ask you about dopamine hits. And if everybody's not familiar, this is like a thing when we shop, we get joy hitting that buy or the research. We forget about that. That we think is like work a lot of times when we're like, oh, we were talking about this earlier. I'm going to buy a new computer probably. And it's like, oh, I get to figure out, read Wirecutter, read some reviews, go on some Reddits. Like, what computer should I get? And we think in our brain, like, oh, I'm doing work. This is necessary for me to do. But in our society, it's kind of also pleasure. It is window shopping, right? When
Mhm.
we're thinking about the best blender, best vacuum, it is just like we want to do that. Work is work. We're getting paid to work. This is not work. But that is where the dopamine comes in, right? I'm going to ask you, Sarah, do you have what did you, maybe your mother, if you want to speak for her, were there anything that does give you a dopamine hit when you are spending?
I mean, I think I would say everyone gets that kind of like window shopping dopamine hit at
Mm-hmm.
some level. Um, let's see. I mean, if I know that it's something that's going to really make my life better, then yeah,
Okay.
definitely. Like I'm super excited about it. Even if it's something dumb, it's like the new sheets that aren't going to like pop off the mattress every like 3 days. And then
Yes.
I'm going to wake up
Yes.
with the sheet like halfway down my arm or whatever, like, the bottom sheet.
I do. I do.
And I like it doesn't have to make my life like significantly better, but like, yeah, if I like, even though it's a dumb purchase, like sheets wouldn't be something that most people would be super excited about. I would be like so excited in that
Okay.
situation.
Yeah, I think that's fine. As a 42-year-old, I appreciate good sheets. I think there's more Americans that appreciate good sheets than you would imagine. Yeah, I think so. The dopamine hit is a big thing, and I grew up in a household. My parents separated when I was 4, and they both used money differently. So that was like very interesting for me to grow up and see that my mother would say she we had modest living, but she was like, yeah, we're going to go do something. We're going to go out to dinner. We're going to get Christmas gifts and do all the stuff that I would say like middle America kind of thing. Growing up in the 80s and 90s. And my father was also like, I wonder if this is like single dad kind of thing as well. It's like, okay, we're gonna live a simple life. We're gonna go to the thrift store to get a couch, and we're gonna eat spaghetti and hot dogs. Divorced dad lifestyle, and I did that half my life. And so I think I got good DNA for both of those. And I think I still window shop. I do it less because I've set up good barriers for making sure that I don't do it as much as I did like maybe 10 years ago. Good boundaries for that. But I also do still, um, we go to Goodwill a lot to get kids toys. We go to Goodwill to get easy clothes and stuff that we know that like the kids will grow out of in 3 months, and we know that it's just as good and it's 80% cheaper so that we can spend
Yeah.
that all of that money that would have gone to clothes for kids that keep growing can go to their college, can go to a flight back to the East West Coast, it can go to maybe a trip to Iceland. Those are the things we really value. And saying, oh, I don't value this as much. I feel like I should be spending less on it. So yeah, that's how my father was. He did not value couches and he did not value food outside of spaghetti in a box.
It's so interesting how the way that we're raised impacts our money story. Like it just,
Hmm.
and it's one of those things. I mean, there are a lot of, and it can be in a very healthy way or, also very unhealthy way, as I'm sure you have a lot more
Yeah.
experience with than me.
Yeah. Yeah. I mean, the unhealthy part is that it's so interesting because it's so available, as I said, that they understand it. And it it makes sense because I ask people how they learned about money, and most of the answer will be, I didn't. Right? Because they feel like they don't have a system for it. How did you learn? Like for years, I worked with a lot of creatives. I was a TV writer for years. And I was like, how did you learn how to act? It's like, oh, I went to classes for it. I did improv or writing. I was like, oh, I took class at USC or UCB. But for money, there's not really classes like that we really all take. Like, sure, you can read a blog or go on YouTube and watch videos, but then we have our own feelings about it. That's hard. And then it's also like, well, how do you trust this person versus this person? There's so many schemes. There's so many different ways. Buy a laundromat, do this, do that. It's like, well, how do I really know it's right for me? And so it's really intimidating. So it's like we have to deal with money every day. The average American spends 3 to 5 times a day. And so you're actively having to think, can I do this? Can I do this? Can I do this? It's too a lot of times we're just trying to survive the day as we get older. So there's no real rhyme or reason to do it other than like, am I okay doing this right now? And so those parents, even those small inklings are still there. And we don't even really have a system. And we live in a capitalist society that teaches us to spend. It has all the wire cutter, the Black Friday. We're consumers. That's our title. And so we have no problem spending. But really, when we're talking about money stories, is that a lot of times we have problems saving. Like we don't know what a structure is for that.
Yeah. Yeah. And how does your money story impact your relationship with your partner?
Mm-hmm. Mm-hmm. And they have, hopefully, that your partner's not in the same house as you growing up. They have a different money story. Marry the neighbor at least. And so then you have to join together your finances living in the same homes. Like you're deciding about like who cleans up dishes, who pays property taxes maybe, but also how do you define your goals? How do you define what you want to do together? How do you not clam up right when someone starts talking about money? That's definitely a we can all talk about percentage of divorce because of money. It's very high. But it doesn't have to be, is my biggest thing. It really, really doesn't have to be. It just has to be about having a good system of conversation about money. And then that can right the ship a lot of the time.
Interesting. So, what happens when couples have polar opposite money stories?
They um they try really hard. And I think this is to be acknowledged. It's like you're with somebody, you love them, and you work really hard to fix the boat, to right it. But that is putting a lot of effort, but you still don't actually have the tools to get the ship to go, right? And so it's exhausting a lot of times. And there's burnout. And when you have burnout around money, it's not a nothing because that burn around money means like decisions are being made that either you don't agree with or your future is being adjusted and unaligned in a way that you want to live. And that's really hard to live in that house then. So it's not just talking about how much do we spend on groceries this month or where do we want to go for the holidays, but really it's like a voyage to say like how do we live our lives? That's what money does. It gives us options. And so the other person in your house might be choosing different options about how to live your life. And that is really exhausting. And it's hard to live in that house, I would think. I'm very lucky that my partner and we talk about money, but the goal of as my coaching is that you talk about money as little as possible. Talking about it at the beginning so that you both are on the same page and know how to figure out new problems as they come up or new fun things. But really to see like, how do we get aligned on these things? How do we figure out what our alignment is really the task.
Yeah.
Like somebody is more willing in a couple often to take risk with money, and the other person feels like, oh, I feel very scared where we are, so I have to hoard the cash. I have to hold on to
Yeah.
it because I can only control what I can. Um, can I give some recommendations to the couples out there who might feel like they're in that position of even like either
Yes. I would love that.
and this is for like people who say like, oh, absolutely, my partner and I don't know how to talk about money. But it's also for couples who don't talk about money, but don't really feel like they have a system because I hear that sometimes we don't talk about it. And that can seem fine. But when there's a rocky situation where like there's job loss, which we're seeing in this economy happening with AI happening because war is happening of all these other things that were just uncontrollable, then we're like, we don't have a system to manage it if we've never talked about it. Like there's a great writer named Murakami who's a great writer, prolific, and he talks about his writing is that it's really hard every day, and he has to dig a well every day to find water, but he knows how to dig that well. But then other writers, when they hit writer's block and they're like, well, I've never dug a well, they're in a lot of trouble. He doesn't have that problem because he has a machine to do it. He's customary to doing that. So I think couples, what I say is that couples that feel like they don't have a system or they don't really talk about it, I think you should still get accustomed to talk about it and just build that system so that you're fortified for when there's job loss, when there's a mother-in-law that needs to come into the house and you have to cover expenses, or when there is a large medical bill. You want to be prepared, like you are prepared when you know where the fire escapes are, or all these other things in your life. You might not use them, but you know where the fire extinguisher is in your house, right? Near the kitchen, hopefully. So here's the thing that I always find couples to start with money. I'll tell you what happens with money conversations. The usual starter is someone looks at the credit card bill and says, why did you spend $300 at Target? What
Oh,
is
God.
this? Are you going to Starbucks too much? It's an accusation. No good money conversation has ever started with an accusation. Don't
No.
don't don't start it. You might want to. You might be furious. You might be upset. But if you want to win in that conversation, and win is that both of you feel good, you're not going to do that. And quite frankly, you're not going to feel good at the end of the conversation, period. So, really, what I recommend for couples is starting from a neutral playing field, is talking about what are your financial goals? And I know that could be kind of a big question. And I remember like financial advisors will sometimes ask people, like, what do you see yourself in 20 years? And it's like, I don't know, living on a spaceship. Who knows? What I would say is write down what are like 5 fun experiences you want to put money towards. That could be annual travel. That can be vacations. That can be saying you want a spring wardrobe update every year. That can be like you want to send your niece on a nice vacation after high school's over. It could be lots of different things, but write them down and write them down. Some of them can be just for you, but it can also be like, well, what do we want to do? We want to update our kitchen, maybe. So they should be joint and some individual ones because you're still an individual if you're even in a couple or have kids or what have you. And then we want to write the serious goals. Now, the serious goals, to define them, are things that are going to happen irrelevant to the choices we make. They're serious, and just by nature, they're not fun. So we're talking about retirement, which is a real thing. We don't want to work till we're dead. We're talking about emergency fund, which are if we lose our job, we still have a rent, we still have mortgage, we have car payments. We need to have savings for that explicit situation. We're talking about maybe car maintenance fund because cars break down all the time. A house maintenance fund if you own your house because homes want to turn back to dust. That's what they want to do. And it costs usually 1% of sale price for that house in maintenance every year. So if you bought a $750,000 house, you should be saving $7,500 a year for maintenance. Now you might only spend 3 grand. Next year, though, you might spend 20 grand, replacing a roof. So using that as a ballpark is a good place to save. So write those with your partner. Write the 5 serious, write the 5 fun, and look at what you then have in savings right now. A lot of times couples will come to me and say, I got a savings account. It's got 5 grand, 20 grand, 100 grand, whatever. And I say, what is it for? And they'll say, emergency fund. It's for new mountain bikes and we're going to Nepal. Okay, great. How much do you have discreetly for each of those goals? We've counted every dollar 3 times. So what we really want to do is have very specific savings accounts for each of those. And I don't get paid money for this, but this is still that first step. I use Ally Bank. I think SoFi offers this, and I think the online bank called Capital, where it's just a regular savings account. It's FDIC insured, and you get to put the money in there, and it's pocketed in buckets. I know that sounds glamorous, buckets, but you know how much you have for each goal. You say how much you want for each goal, and then you can automatically deposit every month into that goal. And the reason I love it, especially for couples, is because each couple looked at that 100 grand in the savings account or 20 grand in the savings account. I swear to you, each of them will tell me different things what that money's for. But if
Yeah.
you put it in an Ally savings account or wherever, and you both log on to the same website, you're not going to see different numbers. You both see the same things. You both agree what that money's for. That step alone, I know it's a long step, it's about 4 minutes. I'm sorry about the length, everybody. But that step alone removes the ambiguity about what your goals are. So then if your husband wants to go buy a boat, okay, Terry, you could do that. Where does that money come from? Which goal are we saying no to make that happen? We can still maybe get it on board, off board, whatever. Great. But what do we need to change? Because money is finite for most Americans. There's really a discretionary amount we can spend. So that is the place. Start from what you both agree are important. And if you want something else, what do you need to say no to? And that's a joint conversation. That's a great place to start. Is making it all it means is just starting from the fun place and ending at the serious place.
Yeah, and that feels so much better than an accusation that you're spending too much money or that you're or accusing, like it doesn't feel good to be the accuser either.
No, and you talk about money stories. One of the money stories a lot of people have is that there's one person is the money boss in the relationship, right? And it might have been your mom
Yeah.
in that situation. It wasn't that like they do the accounting, they do the bills, they run the checkbook, as it might have been for mothers and grandmothers.
Right.
And the other person is just kind of not in this decision making process. And that is scary for a few reasons. It's scary because it's like, well, we want to be equal in this relationship. And usually, if you don't know what the numbers are, it's hard to make decisions about goals, right? Someone else is just deciding for your life where your money is going. Second part is if you separate from that person, knock on wood, either through divorce or their loss of life, you don't know where the money's going. And I know countless people who have been in that situation where they're like, I've never ran money in my life. I'm 40, 50, 60, 70, 80, and I got to figure this out now. And I lost my partner. That's
Yeah.
really hard. And there's not a machine that can just fix that. You're going to be in charge of figuring out mortgage and rent and property tax and dental and everything like that. So getting involved now is good for you if you're not the person. And it also relieves the pressure from the money boss who has to be the accuser sometimes, who has to be like, I want to be your partner. I just want to sit at home and watch old episodes of Quantum Leap. I don't want to be the one telling you. That's what we do. It's a great show. You can find it,
I love
Timu,
that.
or Tubi. But you can basically just remove yourself from being that money cop if you are the one to say, we're a team on this. We both need to work on it and relieve that pressure from one person being the party.
Yeah. I mean, even like, yeah, there, like, I think I could not agree with you more because there is nothing worse than being in a stressful or incredibly sad situation and then realizing you're already on your heels. You don't you're on your back foot. You don't know how to pay your own mortgage. Like you don't even know where the accounts are.
Exactly.
And all that stuff's so password protected and secure
Hmm.
that it's going to be very difficult for someone to kind of figure that out in the end. Yeah, that but I love this. I love the idea of this being like we're working toward goals together, fun goals, safety nets, which are still in goals in their own way, even though they're
Hmm.
not like the fun ones, like
Not
buying a
fun.
boat or
Yeah.
going to Africa on safari or something.
But saving for that safety net means you also are protecting the safari. You are saying, like, oh, if something, my job loss happens, I still have money for safari, right? It's like
Yes.
you're not draining one account to pay the other. I think, we're talking about couples, but obviously people are in a lot of different life stages. And I think one of the things that we think about money is that we've talked about is like talking about it. And we don't talk about money a lot. Like I appreciate this conversation because talking about money stories and money scripts, as it's called elsewhere, is like how do you learn about money and how do you correct it is really having conversations. So you can talk to your partner, absolutely. But if you're not in a place where you're talking with your partner or don't have a partner, I recommend having these conversations with your friends, other people in your family or other people you feel comfortable talking to, because guess what? They are also in their head about money and
Yeah.
you are not the only one. So if you want to figure out goals and it's hard to have that conversation just at your own table by yourself, sit down with your friend and you both outline what goals you want. Like, what do you two think about goals and how do you create them? And what have you done in the past that you want to do more of? So, having feedback is what we're really trying to do. And you don't have to share a household with that person to be successful in that task as well. And that helps change those money scripts. You are rewriting you're rewiring your brain by doing that. The more you discuss it and the more you're intentional with it as well.
I love that. Dylan, thank you so much for joining me on the wedding dish today. This has been such a fun conversation. It's always so lovely to chat with you. You always have so much incredible information to share. And I just appreciate having you so much.
Thank you for having me. I love to do what I do as a coach. I love helping couples and individuals, and I love bringing up 80s movies and TV references at the same time.
Me too. I'm here for it. Where can our listeners find you online?
I have a website, dylanteachesfinance.com. I have a wonderful newsletter I write myself. You can find more tips that are great first steps to talk about money and also written with the mind of for people who don't want to read about money. How do you digest this stuff? And I love writing in that voice. So I just recommend going to my newsletter, and I also have some great other resources on there as well. And on my Instagram at Dylan Teaches Finance as well.
Love that. And we'll tag you on Instagram. We are at the Wedding Dish Podcast. You can give us a follow too. And we'll add your website to our episode description. So it's super easy if you're out walking the dog. Hopefully not a coned dog, no cone of shame for
Mm,
yours. Like my poor little Snorosaurus Rex over there.
uh,
Um, but it will be super easy to find Dylan. And if you would like to be a guest on The Wedding Dish, you can fill out the application on theweddingdishpodcast.com. I would love to have a conversation with you as well. Don't forget to tune in next week. We have another incredible episode coming your way. And if you like the podcast, give us a follow, rate, and review on your preferred podcasting app. Until we meet again, cheers, everybody.